it looks like to me we have some of that bullish dumping going on.
Let me into my zone. Let me into my zone. Please don't let me into my zone. 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 Please don't let me.
Well, welcome back to Crown's Crypto Cave. Wishing you a very happy and healthy and even profitable start to your Monday morning over here from Helsinki, Finland. Nice and overcast, just the way that I like it. Get that sun out of my face because, well, it actually felt pretty damn good yesterday. But we're back to normal over here in good old Finland, full on lockdown from the good old coronavirus. We are officially the quarantine cave, and we welcome you with open arms, baby. Anyways, we got a lot to talk about today with Bitcoin. We haven't had a little bit of that continuation move that we were looking for yesterday. Now playing out a little bit of a bounce as well, and perhaps some more to come. So we'll be discussing that, of course. I want to make sure that I make all of the announcements that I have, which I don't have any. Oh yeah, we'll be on Twitch later today, pretty much maybe a little bit after this video. Going to be starting it even earlier, hopefully, than yesterday and the day prior. We've been doing like these incredibly long streams on Twitch. Anyone's welcome to join on it. It's been incredible fun and just shooting the shit, playing some games, and trading when the opportunity arises. That is incredibly special. Anyways, the link's in the description below, and like I said, we'll probably start maybe like an hour or two after this video gets posted, and we'll be running for like, I don't know, probably 7-8 hours or some shit like that. Who knows? I don't have any time, and I don't have anything else to do because I'm quite literally banned from the gym, as I just had surgery about a week and a half ago and still recovering from that. So as long as that's going on, you can expect those to continue, and even once it's back to normal, probably still going to be doing it, but or definitely going to still be doing it, but the hours will certainly shorten. Anyways, with regards to that, let's look at the Crown Trading application right here, which can be found at app.crowntrading.net. It's free. Take advantage of it. Has all these beautiful things that we have made just for you out of our own out of our own team essentially, and I'm very, 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 very happy with the way that it's coming along. There's also updates coming as well, although our next one is a little bit postponed due to, well, guess what, the good old coronavirus. Anyways, I want to put the interest back in on the open interest once again. We've been following this like fucking dogs, well, ever since we had it up, but especially relating it to price action for the last week and a half, 2 weeks with our current momentum. So keep in mind that yesterday to today, when we last spoke, we've actually gone up another 50 million, or about 50 to 60 million, all the way up from low 500 million. What's up, Francis James? Good to meet you, man. Francis James 420, great number, and good to meet you, man. Welcome to the cave. Anyways, we went up about 50, 60 million from yesterday to today. We're finally seeing exactly what we expect to see, with open interest going up, price action coming down, especially after that nice contraction phase where we saw open interest coming down while price action was going up, volume coming down, and volatility coming down, all in the same stroke, which gave us a very nice bias, and I do believe that this is playing out in our favor once again. So I really, 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 really like what I see here. Well, Boolaws are not going to perhaps maybe like this as much, but it does give us a damn good starting place for this price action. And I do believe that we're gonna have some fun times this week, and probably especially in April. Or is April the next month? I think April's the next month. We are one day away from April, by the way. Holy shit, or maybe 2 days. But yeah, it is April. All right, so April Fools is gonna be quite the event, I think. Anyways, other than that, Bitcoin dominance actually did spike up a little bit, so alts getting a little bit hurt versus Satoshis right there. Not a huge movement, but perhaps we'll look at a couple alts here and there. Other than that, total market cap actually a little bit in the green from yesterday to today, funnily enough. And we do see that the crypto fear and greed index is actually ticking back down to the 10 from a 12 yesterday, albeit these are very, 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 very extreme numbers, but actually has been okay in the past. Anyways, more importantly, keep that open interest number in your mind. We're basically at about 580 million right now, and we're up about 100 million from the past 2 days prior. Very, very similar to what we've been saying, and I think that that's going to be a big focal point on the analysis going here and forward. So with that said, let's get into the live stream right here, let's get into the actual charts right here. Starting off with the daily on good old Stamp, as I do like that for my higher time frame analysis. And what do we see here? We see that Bitcoin is on a closing basis below all major moving averages. Yes, we are having a nice bouncy bounce off the area that we spoke about yesterday, right around. Let me pull up the chart right here, right around this blue box, which did the job that blue boxes are supposed to do, given an initial bounce. However, I would be very, and about 10 more varies skeptical the next time that we come back down and swipe it, if we do come back down and swipe it. So that does come with a contingency. Of course, we're making assumptions here, but I do want to paint a little bit of a picture as we get through this nice artwork of chart. So with that said, as you can see, Bitcoin popping back up, testing around the 10 simple moving average. Now we do have CME futures open and live for trading, but I do believe that realistically we're probably gonna have to wait until traditional markets open at 9:30 a.m. Eastern time for the next fun moment of opportunity to likely arise. Anyways, let me just make sure that I get everything situated up here. I do need to bring up my expected moves chart. We'll do that a little bit later. But more importantly, as it stands right now, we do see that Bitcoin is below all major moving averages, as all major moving averages essentially have a negative slope. Now the 10 simple is a little bit of a wild card. It will turn negative if we do close essentially below it, and pretty much everything else is negatively sloped and increasing that slope. So the advanced decline lines, which I actually never really talk about, they are decreasing, of course. Anyways, more important than that, or perhaps just as important as that, we do see that momentum oscillators are once again turning down. This is daily Stokes, which have been pretty good. Actually, not as good as the 12-hour, funnily enough, but they are having a fresh cross, or hinting at a fresh cross to the downside, and it will confirm a fresh cross to the downside, also to be read as a rejection of the bullish control zone if, and only if, Bitcoin, it's like a statement, if Bitcoin especially closed below the 10 simple, which is all the way at 6350-ish region. So again, painting a picture here, I don't really have a strong opinion on how high Bitcoin gets on this bounce. We could very easily wash out, a bunch of over leveraged shorts all the way up to 6600 quite easily. Even 6500 is certainly not, even 6800 is not out of the question. Fill the gap from CMEs on Friday back on over here, which is pretty fucking absurd. But fair enough. It is certainly present. But overall, I do look at this as quite bearish, especially the way that we're kind of hanging down below this region. Anyways, I see a lot of people, especially on crypto Twitter and crypto YouTube, saying that long 5,900 for infinite money. Well, right now you're going to be right, and you are about $300 in the green, and that's great. And I'm actually very happy for you. And I would have longed that as well coming into my blue box if I would have been awake during that time. I was not, but I'm not so sure about infinite money, my friends. Now, here's the thing, and let me go back to our nice situation chart right here, the one that we've been following. Here's the thing. If we do come back down to this blue box territory, again, right around the 5,900-ish region, I'm giving it about a $50 range between 5,850 and 5,950. If we do come back down and swipe that region, I would be extremely skeptical. However, technically speaking, I need to see a break below there to initiate the next major move to the downside, which technically has a measure move off of this rising channel. If you want to call it a bear flag as well, you probably could. Although I would say that, the more conservative way of looking at this would be a channel as it's going to have a more conservative measured move on this one as well, would be pointed all the way down to about 4,200-ish region down around here. This blue box coming in about the 4,250-ish region. Now, of course, again, this is making a major assumption that we actually break this level first and foremost, which we have not done just yet. Or, if you look at it like this, it's a little bit more like that, to be fair, but that's why I use horizontals and use these for more so encompassing price action, kind of coming up with that bias for it. So here's what we're looking for now. Okay, so if you actually were watching the open interest quite intently yesterday, you probably saw it rise as Bitcoin was going down. And then every time that Bitcoin went up, you saw the open interest go down. What is that essentially telling you? It's telling you that shorts are running the price action right now. They're in full control, as anytime that price action goes up, essentially just people taking profit. Anytime that price action goes down, it is, well, big boys putting on positions, it looks like. And what we'd expect to see is that if Bitcoin does come back down around here and you see that open interest spike up again, that's going to be a pretty damn good insight that we probably are going to actually break this region and initiate the moves further south. Now, the move further south, like I said, does have a measure move all the way down around here, 4,200. It is always a little bit strange to kind of just like blindly say that it's going to go down there. Sorry, and we should probably get this around the breakdown point, which is going to be maybe somewhere around here, preferably speaking. But there likely will be bounces along the way. And could it reverse from those positions? Yeah, of course, but it would be a reversal condition would not be met until we construct something new and see a change of behavior. How do we see a change of behavior here? Well, with the way that Bitcoin opened up this new week, especially on CMEs, there's really no reason in my mind at all whatsoever to be bullish as long as Bitcoin is operating below our last kind of little local high right here, which is also going to be encompassed by the yellow 20-minute exponential moving average, as you can see right there. So that is the major condition, and Bitcoin is under pressure as long as we're below that region, which is problematic from a longer term perspective because, well, Bitcoin is now going to be held by an increasingly negatively sloped 21 exponential moving average as we have the death cross on the daily, and more importantly, as we spoke about on the higher term time frame, especially focusing on it yesterday, which I can now directly point you towards the long-term analysis video that I upload long-term analysis videos every Sunday, but the newest one coming from yesterday, Sunday, goes into much more detail on this. I won't go into too much here. I want to focus a little bit more on the shorter term time frames because I actually think that today is going to be an interesting day for short-term time frames. I think it's going to be a little bit more fun. Anyways, we got the 2-day dildo death cross pretty much confirmed. It will cement the confirmation later tonight, assuming that Bitcoin does close this next 2-day dildo below about 6,800, this last little local high. And then more importantly, we're going to see the yellow 21 exponential moving average cross the downside of the 377 right here as well. So let's just look at these in their interaction in the past, as I do want to get a general overview of what I want to show a general overview of what the past results from this have been. But more importantly, we do see that the death cross usually good enough on its own to force some pretty nasty price action. And there's not a name for this cross right here, and people just like throw around the term death cross and golden cross around like all willy-nilly. There's actually very specific conditions for those to be met, and it's just fucking weird. Anyways, you gotta love the internet, man. You gotta love the fucking internet. You gotta love that bullish dumping as well. It's like all the fucking same crypto influencers and people on Twitter and whatnot are saying, just keep on buying that dip. Just keep on buying. Well, unfortunately, that credit card is going to run out pretty damn soon, I think. Anyways, so we do have a death cross pretty much more or less confirmed, and it'll be further cemented in time, assuming that Bitcoin closes below 6,800 today. We'll look at probabilities for that later. I think it's quite likely, but hey, as always, it's Bitcoin, so weird things do happen. But let's go back to the last few examples that we have on this. Now, of course, the golden cross on this time frame right on over here produces phenomenal results, getting basically a 2x from 7,000 to 14,000 in 2019. But in 2018, we have some examples of the bearish version of that, the death cross, happening right here in September 2018. And then as soon as Bitcoin gets ground down below the yellow 21 exponential moving average, that is when the death and decay portion of this dooms drop does happen. And we do play out about from last high to next low, about a 53% move almost. And then this is further catalyzed to the downside by the 21 cross on the 377 right here. Now, I want to put that in perspective with the only other time that we actually have this example as well, back in 2014, 2015. Now, this does not make a trend because we only have two examples, but with two different pieces of edge being used to combine this, and we could also bring it over to the daily as well, which also has plenty of examples there, certainly more. Technically doesn't make a trend just yet, but it's 3 times does, and we're on the third one right now. So pay attention. Anyways, we got the death cross riding over here in 2014 during this failed rally attempt, basically another bull trap. And from next high, or from last high to next low, as soon as we get below the 21 right here, it is dooms drop time, and we get a nice about 59.5% drop down if we take it from getting below the 21 as I did in 2018. So let's be consistent here, about 54% drop down. And what do you know, as soon as the 21 and the 377 cross the downside right here, that's also giving you insight that the trend is emerging to the downside, and we're going to get continuation. And what do you know, in 2020, as it's like 2020 hindsight, it's beautiful. It's just there's going to be so many smart guys talking about 2020. We got a similar thing going on right in over here now, don't we? So let's just kind of play around with the numbers. The last 2 times did produce about a 50%, what we call it like a 50% drop down from this region, and let's just shave off 50% from where we're operating right now. And that actually does put us down around the mid to low 3,000s, which is an interesting number. This is our last kind of accumulation zone in early 2019, and more importantly, or perhaps just as important, if we go over here to the CMEs, everyone wants to talk about the gap. Now the gap boys are like hoping and praying on 6,600 gap right here, and then also it's probably like too far out of the way for the 8,800. I'm sure that there's some absolute amazing person on crypto YouTube saying, guys, I've been studying gaps for 1 month and I found that they always get filled. So we're going to be going up to 8,800 today. No, fuck that. We're going up to this one, 11,800 today. Just forget all of the last few months or last half year that we've just decided to not retest it. But now's the day. Bullish. Buy the dump. Buy the dip. Fuck, I'm wrecked. It's like, and I'm erect. Anyways, funnily enough, Now, gap trading, there is a lot of legitimacy to it. However, the problem is that people have made these into a fucking memes by thinking that they're just like a vacuum that sucks up price action. No, it's only relevant when price action gets there. Anyways, it is kind of funny that people don't like to mention this one down here at 35.50. That also does seem to match up with our moving average analysis as well. And while I did say that the lower time frames, or not necessarily lower time frames, but what we were looking at before as a rising channel, the rising channel measure move does have a measure move all the way down to about 4,200. Let's take this as a bear flag though, because technically speaking, it is a bear flag. So let's just play around with some numbers here. Boolahs, look away, please. Look away, as this is going to be, it's going to hurt me more than it hurts you. But actually, if we take this a little bit from the actual breakdown point, maybe it happens up here. Oh, what's this? 3,200. Wait. Fuck. But the Fed is printing so much money per day, and that's bullish for Bitcoin. Right. Okay. So yeah, I do think that this rally can extend a little bit to the upside here. I don't have a strong opinion on that. Could extend up to 6,300. I don't think that's out of the question. I think it could very easily stab at like 6,450, even 6,600 back over here. But as long as Bitcoin is below this set of highs at 6,800, I am overall bearish on direction. However, short term, we can pop up another. That would be like another $500, which is very tradable. I mean, that's quite literally almost a 10% move from this price point. So have to really differentiate between the lower term timeframes, the medium timeframes, and the high and the macro timeframes. And the high and the macro timeframes are obviously bearish. We have a downtrend on the weekly, and we also have the yellow 21 exponential moving average cross into the downside of the green 55 on the weekly now as well, confirmed as of last night. Not only that, we did close below the 200 exponential moving average on, I believe, most major exchanges. We got 58.70.9 closing price, and that is literally $3 below where the 200 exponential moving average is. Let's see what Finex did. Finex closed about $10 below it, a little bit more than $10 below it. GDAX closed. Well, GDAX doesn't have enough price action history, so it's not going to populate there, and that means that neither is BitMEXCO. But the longer standing exchanges did close below, confirmed, and now we have the beautiful cross of the yellow 21 and the green 55, very similar to what we saw right on over here before this massive dooms drop. You already know the percentage on that. Very similar to what we had right on over here. In fact, the exact same in 2014. And if we go to the BLX index, we might have even another example. No, we actually don't have another example back and over here, unfortunately. Bitcoin a little bit too of an immature asset, and we don't have that information just yet. But for right now, it is problematic overall. So I would say that with Bitcoin, as long as Bitcoin is below the 200 exponential moving average on a weekly closing basis, which right now we're technically above, but on a closing basis, I really have no reason to be like long-term bullish or anything like that. Keep in mind, we also are going to be closing the monthly, essentially tomorrow night at 8 p.m. Eastern time. This is a very, 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 and 10 more varies important monthly close. If we close anywhere below the 21 exponential moving average at 7,300, that's about $1,000 above from price action right now. We've all seen crazier things than $1,000 rally in Bitcoin, but fair enough. If we close anywhere below that, I would look for this market to continue to the downside over a much longer period of time. We're going to see monthly Stokes absolutely free fall into the bearish control zone if that does happen. We're going to see monthly RSI dip its toesy woesies into the bearish control zone, of which we've tested once, twice, thrice, 4 times. I really fear that the 5th time it's actually going to get comfortable within that region and stay there for quite some time. So that's what's kind of at stake right now. So with regards to Bitcoin, I'm bullish for the inverted chart. Bi-weekly is probably the biggest piece of hopium that I can come up with right now. I do want to represent both sides accurately, but do have to call a spade here. So looking at the bi-weekly momentum oscillators are just popping back up to test the edge of the bearish control zone. I don't necessarily think that's a good thing. And I, again, even if we have a rally back up here, to end the monthly anywhere below 7,300 is very, 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 very problematic long term. Going over here to the weekly, I do want to look at weekly momentum oscillators as well. We do see that weekly Stochs are coming down here. We also do see that we have a nice trend line of support for weekly Stochs. I guess I already have it in there, but that's coming in all the way down around the edge of the bearish control zone. So if we do test that, that will imply that we obviously have more downside to go along with it. Not only that, weekly RSI, while it is kind of popping back up here, and I'm sure people are saying, but Crown, it's a channel. It's a channel. Well, that's a fucked up channel now, isn't it? Maybe it is a channel, maybe it isn't a channel, but more importantly, we are very comfortable within the bearish control zone, and now we have the exponential even moving below the bearish control zone, probably on the next tick as well. So we could pop back up and tick it, and we could pop back up and test it. We probably will. Well, no, not we, but Bitcoin probably will. Let's maybe separate ourselves from the inanimate object that we are trading here. We don't want to fall in love, as this channel is focused on traders, not necessarily the moon boys, although we don't discriminate. But at the end of the day, that's who this is geared for. That's going to be problematic as well. And weekly Stochs we already spoke about that. And you probably see some new down around here. Maybe we'll talk about that soon. Anyways, before we get into that, let's go back to the 12-hour Stochs. Obviously still having plenty of room to the downside here, and still same trend line that actually has gotten our last couple lows. Or let's actually go back to the weekly for a second and talk about these lows. So these are all major lows here. You'd even say that they're market cycle lows, they are not market cycle lows, but this last one over here was obviously February of 2019. So basically around the low of 3,100, connected with our late October low before this $3,000 rally to the upside right here. The China news, and then this point right here before this $4,000 rally, and then getting rejected right after that. Now here's the thing, if we do come back down to if we do come back down to this trend line, I do think that it will be a massive opportunity, but again, that does imply that that can take a few weeks to hit, and a lot of damage can be done to price action in between. So again, it's a little bit of a tricky position here, because if I was going to get like immediately very bearish, I would have really liked to have seen the weekly close below the 200 simple, as well as the 200 exponential moving average, but we only got one. But just closing below the 200 exponential moving average is good enough for me to be cautious. Cautious and still remain a bearish bias to the bearish bias to the downside. Wow, I'm actually dyslexic, and it's really embarrassing. I also have a stutter too, so if you've been on this channel long enough, well, you already know. Anyways, okay, cool. So we got all of that. I think we need to go back down to lower term timeframes though, because we haven't really spoken about them too much. Well, the problem is I just don't really have a strong opinion on them. Let's talk about just levels of interest. Now I do see resistance right around about 6350-ish region. If Bitcoin does get above 6350 and close, especially like even a 2-hour dildo above there, but especially a 4-hour, I would look for extension actually all the way up to 6650, 6700, and that's where things actually could change around. So it's as always possible, right? And we'll look at probabilities soon, but we also have a downtrend. Now here's the thing: to add a little bit onto the side of the bulls here, we do have all momentum oscillators on the lower term timeframes. To be fair, turning up. We got 4-hour Stochs turning up. 3-hour Stochs obviously going to be there. 2-hour Stochs going to be there as well. And hourly Stochs already up there. But wait, Boolaws, I'm not letting you off freely just yet. It's time for some waterboarding information. Trend line rejection right there. Same trend line coming in right here, providing resistance a little bit higher. 3 hours got the same one actually doesn't have the same one, to be fair. And then 4-hour, do we have anything to be aware of here? No, it just looks completely wrecked is what it looks like. Now, momentum oscillators, there is no such thing as overbought or oversold, but I would look for the bearish control zone to kind of put a lid on that price action if we are going to remain bearish within this and actually break this to the downside. And like I said, they're likely, if Bitcoin does break below 5,900, there likely will be bounces along the way. This blue box right here at 5,500 alongside the 200 simple, I think is a damn good candidate for that. Then we got this guy right here, right around 5,100, and then down we go into the depths of 4,800 probably is an area of interest as well, and then 4,200-ish region. So At that point, we probably will be making bullish divergence if Bitcoin does go back down below 4,500 on the daily. And just to remind myself to talk about this, we've never seen Bitcoin bottom out on a major market cycle or even just a major move without bullish divergence on the daily. Now, of course, we've had a very phenomenal move off the lows right here. I think that's just kind of a testament to how volatile this asset is right now, and we're going through a contraction phase, which is what you'd expect. But to put this in perspective, Bitcoin had 2 drives of bullish divergence here before this $4,000 move, 3 drives right here before a $3,000 move, and it works to the downside as well with bearish divergence calling the tops. 3 drives of bullish divergence on this last market cycle low right here, several cases in 2018 on all these failed rally attempts, and then we can go back to 2014, 2015, but you already fucking know. But as always, feel free to go back and check yourself, and don't trust, verify, or whatever the fuck the saying is. It doesn't matter. Daily RSI, obviously very bearish here, as we are caught within the bearish control zone. Yes, it is going to pop back up and probably test around it, but as long as we're especially below the 21 on the daily, I'm overall bearish. As long as we're below the 2-day 21, I am very bearish. Just can take a little bit of time to play out. So for right now, we are going to be probably extending this rally a little bit more. But I am skeptical of it. Again, as long as we're below about 6,800-ish region. Now, could it be that Bitcoin just absolutely green dildos its way back up to, what is it? 7,300 and actually changes around the macro? Yeah, it's absolutely possible. We've all seen crazier things than that happen, but right now I'm not necessarily looking for that to be the main issue on this. I suppose the biggest thing for the bulls right here to represent their case is that if Bitcoin can put in a local low right here, which is not done just yet, we need to see continuation, especially above the 21 would be great. Then on like a 12-hour, then we technically would have a higher low. But here's the thing. With open interest going up, oh wow, and open interest actually just went up as price action is going up. So interesting, very interesting. A little bit too early to judge this one, but I want to see where the next 12-hour dildo closes. If the next 12-hour dildo closes below like 6,200, that should be a good insight that those positions are being added short. If we close above, let's call it like 6,300, then we should probably get some continuation all the way to 64, maybe even 65. Wouldn't throw any too much off the books here. But again, we have a bearish redistribution pattern in the formation of a rising channel with volume signature confirming this as it tails off left to right. Open interest rising, open interest was falling the whole way through here, but more recently has been rising as we move to the downside from 68 all the way down to 59, and volatility has been contracting the whole way through as well. And by the way, 4-hour historical volatility percentile is now looking like it wants to expand. So where does that expansion come to? Well, what side did that expansion come to? It obviously does not tell us direction, but that is what trend is for, and that is what our other tools are for. So we have very obvious areas of change behaviors, and that's essentially what I keep the focus on. More importantly, though, we are seeing that the historical volatility percentile is finally starting to break the moving average on this, and also break this trend. I mean, you can just kind of run a regression through here and see it with your mind's eye, anyways. And I realize that this video is already 27. How the fuck is this video already 27 minutes long? The fuck? I feel like I haven't said that much, and I could say and there's so much more to say, but I guess I'll keep it a little. I guess I'll just point people towards the long-term analysis video, and I won't get into that today. But more importantly, on the 4-hour historical volatility percentile, anytime that we've gotten this low, basically into the single digits or even a zero read, which is what we saw right here, that precipitates multi-$1,000 moves, like we saw back on over here, February, like we saw back on over here, late January, like we saw back on over here, December. And we're talking about these moves right here, this move to the upside right here, this move to the downside right here. These are all major moves, actually, and it is very well gathered by the historic volatility percentile. Anyways, Bitcoin, green dildo in sway back up to 63. Nicely done, Bitcoin. Nicely done. I like what you're doing there. Give yourself a little bit of credit. And let's now go look at probabilities on the probability chart. Let's bring it up right here. There we go. Okay, beautiful. And alrighty, let's see. We're on the 12-hour right now. You can see that we're actually a little bit above the first standard deviation right now, and the second standard deviation is coming in right around 6,500-ish region. So what does that mean for price action? Well, I do think that I don't think that it's out of the realm of possibility to test right around there. But again, where do we see the third standard deviation? It's actually a little bit above 6,800. So around 6,800, that is very, 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 very low probability that we actually do close above there on this next 12-hour dildo, closing in 4 hours and 56 minutes and 1 second. So I think that I think that it's very unlikely for this to happen. Now, what we can do though is we can extend this actually out to tomorrow's closure for the monthly chart. So let's go over here to a daily, and let's first actually look at the daily. And actually, let's look at before we do that, let's look at the probabilities on the 12-hour first. Let's pull them up over here. Okay, so where is our critical areas to the upside? This isn't even a critical area, but short-term relevancy right around about, we could call it 63.50. This is gonna have a pretty high probability of closing above, I think. Let's see, 6350, and let's see what it shows. Probability of closing above there in the next basically a little bit less than 5 hours is about 46%, which is pretty good, actually pretty good. So if that does happen, I would look for extension all the way up to probably 66. That would actually be filling the gap on CMEs, and then, well, fun times likely after that. By the same token, to the downside on the next 12-hour closure, probably not gonna, I would say probably unlikely here. Do you think that we're going to play out this bounce a little bit longer, right around, let's call it 5,900, market to the middle of that blue box, and what do we show? About 11.5%, so pretty damn unlikely in the next day. But what I do want to put the focus on is the fact that all of the probability rings of these guys are now directly angled to the downside and quite aggressively angled to the downside. Now, obviously, it can get much more worse than this, like we saw back and over here, but this is kind of an outlier to be fair. Anyways, let's go over to the daily and see what the day's close is going to look like, and let's look at what the monthly probability is going to look like as well. And the daily reveals all. The top side of the first standard deviation, which is less than a 16% chance that we close above, by the way, is coming in where? It's coming in 65.50-ish region. So Bitcoin does continue above this point right here. I would be targeting about 65.50, 6600-ish region, and probably not higher than that, at least for now. And if we do look at the probabilities of that, come on, you fuck, there we go. Well, we can look at 5,900 first. The probability of closing below 5,900 is actually well within the realm of possibility. It's actually 28% or almost 28%. And you can see that the bottom side of the first deviation is coming in all the way at 5,200. So it's very reasonable to think, and these are massively squeezed into the downside as well. So do we have a quick squeeze to the upside before I move to the downside? I think that's what we're seeing right now, and I would keep that. And I myself as a trader. And this is not financial advice. I'm not a financial advisor, of course, and I can always be 100% massively wrong and just and fuck myself. But as long as we are below 6,800, I do believe that we will be heading down. We will be heading south, and it's not until we get back above 6,800 that it's even a topic of conversation that we're seeing a reversal or anything resembling a reversal on the medium and higher term timeframes. This all just looks like redistribution to me, is what it looks like. So yeah, again, below this is just for the first deviation to the downside, by the way. That's all the way at 5,300 essentially. 5,300. That's even below the 200 simple on the weekly. I mean, this is big boy numbers there. Anyways, what else do we want to talk about while we're here? Oh yeah, well, let's look at the actual probabilities to the upside as well, because it should be somewhat formidable. Obviously 63.50 to the upside is going to be pretty likely. But again, that's only relevant for the short-term timeframes. It's the medium and higher term timeframes that change around above about 6,800, where I could really start to let go of a bearish bias, medium and long term. Short-term, floating around all the time, but let's go check out what 6,800 shows. And sorry, to confirm, that was 47% probability. Anyways, putting it on to the 6,800-ish number, on a daily total closing basis, we show about 23.5%. Chance to close above there by daily close. Now, here's the thing. I want to look at what tomorrow's close is going to be for the daily, because tomorrow's close for the daily is very, very important, because it's also going to be the monthly close, so we can get an idea of what that's supposed to look like as well. And what do you know, when we look at the probability for closing above 6,800 tomorrow, which is irrelevant, remember, the monthly we need to see close above the 21 at like 7,300, but we can look at the probability for this right now. It actually is a 30.5% chance, which is pretty fucking high. But let's look at what's relevant for the monthly. 7,300, about 7,300. And what's the probability that we close above there? It's actually a little bit above the second standard deviation, which is strange, because I'm showing different probabilities between this and this. anyways, to be fair, it is. I mean, if we're looking at standard deviations, it's showing around the second standard deviation, which is actually a little bit less than a 2.5% chance to close above. But if we're marking it off of this is a little bit strange. I might have to talk to Bali about this just to make sure that we're on the same page. But this is showing about a little bit less than 17% chance, which is actually it doesn't sound that high, but it's a lot higher than what I'd expect. So very, very interesting. I suppose perhaps it is because the volatility is incredibly expanded right now, so that would obviously make the calculations much more wide, much more forgiving, which is the way that it should be right now. But again, these guys are very much angled to the downside. I don't want to provide any more hopium than I think is really necessary, because I do think that is probably more harmful than anything else. But yeah, as it stands right now, it does look to me like Bitcoin, could very easily pop up a little bit longer here. But as long as we're below 6,800, I'm very, very cautious to kind of like wrap up those thoughts in a nice bow and tie. I'll give a little bit of insight on what we're looking at the bottom pane right here. This is the Crown CME Expo new indicator. This is tracking institutional, professional, and retailer traders net positions on CMEs. And we actually do have some pretty good data for this. I know that there's other indicators representing this online. However, we found that the inputs that they've been using are not efficacious. They are not legitimate. It does not line up with the data that we've been mining for this. So I trust this a lot more. Anyways, we can see that retailers are always net long, funnily enough, which kind of makes sense. And retailers are more net long here at this price point than they were at at the last high at 14,000, which is kind of funny. So that's a lot of longs to potentially capitulate if we do head further south. That's a lot of people who have already bought. So there's probably like a lot of intuitive thoughts about this. Like, hey, if everyone's long, then that's good, right? No, because if you're long on margin, then that means that you've already bought. That means that you can't buy anymore. And what do you do after that? Well, unless you're like the true fucking hodler who's going to hodl until death, which doesn't even make sense to begin with. Like, let's say that you have that like you're a realistic person, you're going to sell at some point. So the only thing that you can do after you've been long is sell. It's just like how a short position is kind of like a synthetic long position anyways, because you got to buy at some point. Now, with longs, it's a little bit more tricky because you can technically hold them. We don't know how much equity these guys have, but seeing that they are retailers, I would say they're obviously not professional traders as they designate themselves, so they probably don't have all that much money, and that means that when margin does come into question, well, they will have to capitulate. Now, we do see that our purple guys is going to be let me just make sure, it's going to be our net professional traders, and then the blue is going to be net institutions. Net institutions are actually quite bearish here, but professional traders actually are teetering on the seesaw of being net bearish as well, although they are technically net bullish right now, or net long right now. But what it looks like to me, and this is something that I'm going to be focused on a little bit more in the future. And again, this is not open access right now. I only have access to this right now, and I'm playing around with it, and it's still in the development phases. And perhaps we will if we do give out access to it, it'll be for the people in the TA in any one of the programs, essentially the TA program or the options program. And what we see right here is actually something very interesting. Or I guess I don't have it drawn in here, but we do see a nice trend line forming, correlating with some pretty major areas on Bitcoin. This first top, obviously correlating with this top right here before a nice a little bit over $1,000 move to the downside. This next top right here gets the actual distributive top of 12,500 before all this essentially, and then we have it connected with this guy right here, so another inflection point on the market, and then this guy right here, so another inflection point on the market. So this trend line is accurately getting inflection points on the market. It doesn't matter for bullish or bearish. It's just telling you that we're at a major turning point. And I would say that I would expect that trend to continue as we do have 4 tests here, so that's pretty damn good. And if we do meet up with this trend line once again, I would expect the next major either the next major local high or local low to be put in. Probably next major local low if I had to guess. So how much damage is done to price action before we get to that level? I don't know. But what I can do is I can put a nice alert on this so that I am notified if and when that does happen, as I do believe that is this alert. Hey, just maybe don't do that. But fair enough. So I'll put that in, and we'll reference that going onwards and forwards here. But I do want to just give a little bit of a shout out to it right now. Our beautiful programmers are just so fucking lovely putting this stuff together for us. Anyways, okay, cool. So what else do we want to talk about? There's not really too much to talk about on traditional markets because they're not open right now, or at least American markets aren't. But we can look at Japan. Japan's down. So we did confirm a little bit of a local high here. I think that's also problematic for Bitcoin, as we've been showing the correlation between them. Don't want to go through all of that right now because this video is already way too long. Oh my, it's 38 minutes now. What the fuck? I think I have an issue with talking. Germany down as well. Looks like a local high to me. And gold, what's gold doing? Gold's actually operating pretty nicely here, but I do think that it is going to pop back down and test around 1590. But I do think that it's going to bounce from there too. And I do think that it's going to reach up towards 1700 high again. And assuming that this monthly closes anywhere above like 16, anywhere here or higher, essentially anywhere above like 1600, essentially, I would look for continuation coming into the next few months. Again, this is coming from someone who's not a big fan of gold or anything. Like, I don't own any gold. I don't care about gold. I think it's kind of silly. But when the world needs to pretend that we need a hedge that isn't like an actual hedge, gold is going to be it. And gold seems to be the one that's actually acting like that, in, contrary to some like Bitcoin or silver or whatever the fuck else. So yeah, any sort of close like this, I would look for this to work its way into the into the deep 1700s over the next couple months. April, what's after April? Who knows what's after April? But it doesn't matter. The month after April would probably be bullish as well. Other than that, what else should we be looking at? We can do a quick synopsis of SPY over here, although nothing's really new because we haven't opened it up. But looking at the general world markets, yeah, we don't have pre-market data here just yet, but or pre-market's not trading. I do think that we're probably going to pop back down below 243.5. The big thing to me, or the big thing for me for traditional markets here, was that we did close below the 200 simple and 200 exponential moving average, which I really do not like, and I do think that we're going to probably pop back down to like 235-ish region and maybe try another bounce there, or better hope and pray that we try another bounce there. I do think that it'll initially bounce there, but I do think that this is probably going to come down a little bit. So perhaps we have to wait until traditional markets open so we can get some nice movement on Bitcoin. Until then, short term a little bit bullish here, or showing a little bit of signs of bullishness here. And then after that, I think it's maybe fun time once again. So I think we should maybe briefly wrap up the lower term timeframes here. Let's go back to this chart. This is the one that we've been following. Short term resistance to the upside at 63.50. If we do close above there, especially on like a 2 hour or a 4 hour, I'd look for extension all the way up to like 66 or even 68, or actually more like 67 to 68 region back over here. Why not? It's kind of like a nice vacuum, and we do have the nice gap there as well. So would satisfy all the gap boys' ambitions. However, as long as we're operating below this, I do think that we're more or less just medium term and long term bearish. Short term, ebbs and flows all the time. But if we do come back down below this point now, so we can actually move this up a little bit. Now I've been saying 5,900 is the actionable area for the downside. We can actually move this now up to 6,100. So if Bitcoin does start to close 2 hour or 4 hour dildos below there, I do believe that we're going to see this move play out to the downside with bounces along the way in all of these, likely in all these areas. But I think that's where the damage is done. So I think, and of course, if Bitcoin does get above 6,800, I'd look for a move all the way to 70, 72, 73, and that's when I tear all this down and say I'm bullish again. Well, at least bullish for a while. So with that in mind, I think the next big thing is really to wait for the monthly. It's going to take a little bit of patience for one more day of trading, but if we've been waiting this long, why not? So with all of that said, the monthly is going to trump all. But for right now, if I did have to kind of look at the lower term timeframes, that's what I'd be saying. Other than that, I want to wish you well once again. I'll be back on Twitch a little bit later today, maybe in like a couple hours. And with all that said, I want to wish you well and want to say it's been a massive pleasure having this one-sided conversation between myself and you. And as always. And as always, man, I just want to say that with this whole coronavirus quarantine thing going on, it's actually been really cool to have this community, because you don't really feel all that isolated when you're surrounded by people who are, in similar lifestyles than you, and talking about similar things. And we're all in this together, and we're all going to get through it together. And that's like that's your positive message of the day. So have at it, Tony Robbins. I'll be signing off now. Take care, and until next time.